All right, good evening, guys. It is the Tortoise Nightly Strategy Podcast for December 15th, 2020. 10 days to Christmas. Where did the year go? All right, let's start with the market health check first. So we're looking at a 30-day range. Of about 13% from 30-day high to 30-day low. With most of that happening in those 5 days. You know, you got to a high here, and we had the low down there. So most of that gain is in 5 days, and then the rest of it is this really tightly compressed set of moves here, which just may be starting the third leg up. So if we just count this as leg one, pullback, and then a leg two, and here's the pullback, and here was the pullback, then this just might give us leg three, which could get us to 375. So we went from a winter to a very brief spring, summer, fall, and now it won't take much to get us back into summer, and that would make this on one more little follow through. If that RL10 breaks out of the dragon right here, which should take about one more day, then that would give us a supported fall crossing to the upside, and that would be very favorable. We've had quite a long run of that rising PSAR. That's about, well, if this was 30 days, then this is about 25 days of rising PSARs. Although we are now facing the RL30 rolling over, meeting the PSAR, so we have this little like land between the rivers right here, a perfect critical state here. We're either going to get the SFC to the upside, or this rolls down and it's an SFC to the downside, where it breaks through the PSAR 1 and 2 and the 10-day low and the Bollinger Band mean. So that could happen pretty easily in the next 5 days. All right, if we zoom in on the 10-day range, I guess the last thing I would say is noticing the real compression here in the Bollinger Bands that are starting to really converge now. Now that most of this volatility is gone, we're getting a real tight Bollinger Band compression here, with the Z2 up here at 375 is the upside target. That's the next target after, if it can get through the 10-day and the 30-day high here, then the Z2 is the next target. Let's look at the 10-day range now. So now as we look at the 10-day range, we've had the 10-day high, the 30-day high, and the all-time high all made right here 6 days ago. 10-day low at basically 363. 10-day high about 371. We have a local minimum here in the RL10. And today it basically came and met the baby dragon, and then price powered through and stopped right at yesterday's high, but also at today's high of the day. So it's kind of an inside day because it's contained within yesterday's range, but it had a very strong close, and that's sort of the argument for continuation tomorrow. So all it has to do is get through the peak RL10 right here, and then the all-time high right there, and that thing is free and clear. So if it just makes an ATR move, that's about 1%. So it'd be about $3.50. That would put it at 372. So this is about right about there would be a plus one ATR move to the upside would get to 372, and that would be an all-time high and certainly would clear the hump. So we've got a dragon peak right here. We've got the RL10 price right there. We have our PSAR tomorrow at about 366.25. That's an important support level. Then today's PSAR was 365.5. 10-day low. RL90 and Bollinger Band mean down here at 360. That feels significant to me. This is 363 for the 10-day low. And then really no support whatsoever afterwards down to 352. Excuse me. 352 at Z2. The long-term fair value, 345. Z2 at 344. Z3, and then the 30-day low all the way back there at 322.6. Upside, really, once it gets past the 10-day high, 30-day high, all-time high, there's nothing holding it back. This is Z2 line here at 375. Uh, 375.6. That's just a statistical projection. That's about 2 ATR. So we need to see about plus 2 ATR to get there. So that's still within range this week. Yeah, okay. Cautiously optimistic. Today was a day it could have cracked, and it did not. All right, so let's look at the indexes today. We're going to start with the S&P at 1.35. The Dow trailing just slightly at 1.18. Treasuries all the way down here at minus a third, minus 0.33. And then on basically a strong day across the board, the Russell was up large at 2.5. All right, so let's look at the sectors that did better today. So the market 1.35, Mexico 1.4. Here's a little cluster of tech, finance, and materials at about from 1.67 to 1.8. Energy 1.9. So all four of our primary sectors were much stronger than the S&P today. So broad-based strength on a day when all the equities were up. Yeah, Senny, it's posted. I'll send you the link after. Simon Property Group. Oh, I'm sorry, I skipped these. Oil exploration 2.1%. The FANGs up 2.2. Brazil 2.2. Simon Property Group for the commercial real estate up 2.77. Wheaton Precious up 3%. Steel 3.12, 3 1/8 essentially. Bitcoin 4.5. Clean energy 6%. And then the triple techs were up 3 and 4.85. So today it was a reversal from yesterday. The broad tech sector was up better than the NASDAQ. Counting down from the top, the companies now that did better, NEO and Win, are speculative intraday traders. Apple 5%, it's finally coming through. U.S. Steel, Cliff, all part of the strength in steel sector, and they were better. So U.S. Steel up almost 4%, while steel the sector was up a little over 3%. Silver 2.9, Devon Energy 2.7, Caterpillar 2%, Alcoa 1.88, Nucor Steel lagging the steel sector somewhat at 1.6. Twitter and McDonald's continued its nice little run, little recovery run here at 1.4. So very broad-based support. Let's look at the sectors that did poorly compared to the S&P. So have this cluster around 1% of oil, healthcare, emerging markets, and quality low volatility, about 1%. EWJ Japan 0.7. The Ackman hedge fund basically flat, and then VIX 4.6%, minus 4.6. Okay, companies that got smashed today. Virgin Galactic, second day in a row of strong selling, 7.4%. Palantir down 3%. Tesla down 1%. Recovered from a lower, and basically a pretty good intraday recovery after early weakness. Walmart and Microsoft basically flat. We framed Walmart yesterday as a critical stake breakout. Today it didn't really vote one way or the other. It was tradable intraday, but it was not decisive. That would cause us to want to take a position. I'm expecting that move tomorrow, though. We'll take a look at the chart. Other laggards. Now, these all made money, but they lagged the S&P. So Amazon, Boeing, NVIDIA, Nikola, Procter, Home Depot, all were lagging the S&P. Take a quick look at some trade frames. So the first one is in Tesla, and this one is a response to a morning sell-off. So here's the opening right here, and it has a bit of a gap up, mucks around all day, and then right here it collapses below the VWAP and the long-term fair value. And then these are all places in which I'm going to show you these red arrows. These red arrows reflect, let's see, places where a collapsing dragon was possible. So all I'm doing is just projecting over from the previous RL10. Now, what that means, when I read this, this one is really the best one. I don't mind you getting this one because it's also it's breaking below the VWAP and the RL270, but this one is especially key because it's breaking below this this one, and then really the statistical low of the day. This one is also really important. Try to draw that straight. So these shorts in these regions 1, 2, and 3, these are all collapsing dragons, and they are, they coincide with some other key technical indicators. And even if you got the last one, and this is the reason that I love the collapsing dragon, is because when it fails fast and in a hurry. So you got about a $2.50 risk on position 3 to get to the trailing PSAR there. So $2.50 of risk on the downside. You're getting a move, maximum favorable move. Sorry. Stupid. To 625. So that's about $12 on a $2 risk. So even if you get entry 3, you're getting a 6-to-1 trade. I looked at this one as an excursion past Z3. The RL10 rolled over. It crossed the baby dragon. It entered the dragon. And now this was about a $2.50 risk. So on this reaction against the overdone selling, it looked to me, I bought this one here at about 630 and a half. And my target on this one is going to be, I'm looking at the return to the VWAP, which is going to be around 641. Or 640, I should say. So as this starts making that move up, it gets about a third of the way up, and now I notice that the PSAR is only here. So there's that much in this blue arrow is at risk, right? So if it comes back and hits that, I'm not even ready in the Wu Wei exit yet, because I haven't gotten 3 dots above my entry. But that move was so fast that I just used a sniper exit strategy to move my Wu Wei stop, which normally would have probably lasted to about here before it moved up. And right here, I just moved that up really to about half of an execution R and just locked this in here at the base of the dragon. And then just drew that, and then just kept that line right there. And that's going to be my stop. And that way, the worst thing that happens to me is I make a fraction. Okay. And this thing ended up going all the way to, like, if I remember, about 644 before it ever looked back. So there was a really strong move, which is not surprising because now it's coming back to this previous support level, and really 642 is the VWAP before it collapsed. So that move from here to here, even if it went like that, would not be surprising. Okay. But the main point is that I like getting my risk out. Excuse me. I like getting my risk out of the trade, and so that's the justification for this early move of the stop up to no lose plus dinner for 2. Okay, so that's Tesla. This next one is Brazil. So Brazil did not much this morning, and other than the gap up, but the previous day was a strong move up. So I'm looking at on today's gap up, I'm looking at for an opportunity to get long. So it has a big gap up. sells off. Here's a low in the RL10. Here's the second low. The fall turns to winter. Now it crosses the VWAP. I go ahead and take this as a long position. Draw the risk box for you. So I'm just marking my risk off here at the PSAR flip. So that's only about 5 cents. I would not be offended if you came all the way down to the low of the day, where Z3, to give you a 10-cent risk. That's fine. It moved up as it rolled over. It didn't follow through. I took the exit here at the VWAP so that I wouldn't lose any money. I didn't have the will to trade this one in here. It made a double bottom. I didn't really consider this to be a Kata 2 because it wasn't a higher low. And, frankly, there was nothing in the moves this morning that really gave it any sense of urgency. It wasn't until about 10 minutes later when this thing broke out above the previous Z3 that I went ahead and bought this one here. I looked at that as this was the opportunity for it to come back and sell off to the VWAP, but it didn't. It was moving out and got to Z2, so I bought this here, and the risk box again is only about 5 cents. So if you use a 10-cent for your position, for your execution risk, I wouldn't be offended. This one was a 1-2-3 sniper exit. Whoops, sorry. So it actually, and I was slow to recognize that, it had moved past Z3, and so I was optimistic, whereas I should have been cautious and should have exploited it. But the give back was as large or larger than the risk box. But we made bank on it. Then we have a legitimate Kata 2, I should say. So this is a Kata 2 entry. So I treat this one as a swing low. Here's a higher low, and then we're moving towards the RLXD. So I front run that a little bit, and so I got the re-entry in, and I think that one scratched a little bit later. There wasn't much to it, so there wasn't much follow through in Brazil in the first half of the day, but a useful re-entry. All right, so this one was U.S. Steel. So U.S. Steel demonstrated its vulnerability yesterday. And here's how I read this one. So there was initially a big gap up to here, a big gap up on, I think, a reaction to the oversold conditions. And I want you to notice that yesterday the sell-off was sharp, by which I mean the VWAP closed here at like 1770, but it closed at 1730. So that sell-off from the VWAP to here is sort of an indication of a kind of like panic selling in the afternoon. Let's see. Now, after this gap up, it did nothing but show weakness. So it had these two little dragon horns outside of the Z3, and then did nothing but sell off, and then crossed the VWAP and then the dragon. So I got short U.S. Steel here at 1770, which was yesterday's VWAP. So once it also broke below yesterday's VWAP, that was also kind of an indicator. So here was yesterday's VWAP. So now when this crossed below that VWAP, this was another reason to get short. And now my risk box on this is going to be like to the VWAP. So that's about maybe a 15-cent risk. I feel like I gave back too much on this one. So here was the maximum favorable excursion, and then I bought essentially it was an SSC exit. I waited for that second crossing of the dragon, and then that timed me into then. So I captured a little bit, and then that's like a stop and reverse, and then immediately started selling off. And once it crossed the dragon right away, I covered this and then got short when it broke below the PSAR, and then that one turned out to be a nice trade. And then I take the RLXD exit, which is really an SSC. I didn't have the will to stop and reverse, but there was a trade in there. I did play when it rolled over short of the VWAP and it rolled over here at the RL270, which is also the price where it closed yesterday. I went ahead and got short here with the stop at the PSAR dots. This could not make a new low. So when I noticed that, that made this exit pretty easy for basically a scratch, a little fractional win. And then I got long here. This one had a little bit more follow through, but I just wanted to show the back and forth in the morning. So this one is, let's see, where is that? U.S. Steel. Yeah, so here's that second trade now, right? So this was the RLXD I didn't take, and this is the one I did take, and then that one followed through pretty nice. So this is really a COTA 2 because you have a swing low, a higher low, you have an RLXD, and so the exit box here is like this, and that's going to be basically about 15 cents, and then that gives you a nice follow through to the sniper exit. I had considered a second position here, but I didn't have the will for it. I was kind of keyed up on Tesla, and I did not have the span of control to be able to take it. But there's a possible second position there. There's also a third position, or another position, I should say, here when it crosses the VWAP, and really when it gets above this zone where it collapsed, this is a reasonable place to add a position. And here's clean energy. So clean energy has been on a nice rebound. This one was here's where it closed yesterday with the VWAP also, and today was a nice gap up and just continued to go. So at this point, this was a hybrid frog entry at right around 91 with a risk box of about 40 cents, maybe 50 cents. It has a nice uninterrupted move up. It has like 1, pause, 2, and at this point it came back and hit the hit the Bollinger Band mean, so I just took the manager's exit. That felt good. I was tied up with Tesla in here, so, otherwise I might have tried this one. I hope I would have scratched. I like this one, this reentry here, because it comes back, and this is the same place that it had a strong move up here. And you get the RLXD, so I get my initial stop here, and then I think this scratched shortly afterwards. This made, or no, actually PBW went up to 94.5. So this one actually turned into a decent intraday trade as well. Last one was McDonald's. So this was an intraday move. Never really got out of yesterday's yellow zone. So I just wanted to, and so it did not make a decisive move while the rest of the market was decisive. But I do want to just show the difference between these consolidation zones, like these boxes in here. Let me try and draw that a little stronger. So a congestion zone. And here also, and then these other, and then meanwhile you have these directional moves. So this is not unusual in the large caps that you get a move, consolidate, get a move, and consolidate. And the thing to notice is that you get this Bollinger Band expansion because of this upward move. That's what makes the Bollinger Bands expand. And then this contraction zone is what gives you the Z3 pinches. And then this is the case where if McDonald's was on your trade list, this would be a natural Z3 excursion here with a stop at the bottom of that box. And you would not have lost money on that trade. So this is where you can watch to see the compression happens when the Bollinger Bands pinch, and then you get this sideways action, and then these breakouts from that sideways action become useful. Like right in here, would give you a tradable move. Let's see, I think was that it? Yeah, that was the trades for today. And now we got daily report up next. Okay, so we've already seen the daily. So we remain in bullish quiet. And we're now back to overbought on all dimensions. We're within a fraction of that breakout from the all-time high, as we saw. ADX getting a little bit stronger now, up to 21. Volatility got a little quieter. At 0.96. Our risk Z is still risk on, and the The risk Z is now down to 0.43. So it's getting near a decision point here. As it teases the all-time high again, this is one where we either want to see it break through decisively, or we may see a decisive sell-off. So we're getting closer to a volatility spike here. Just don't know the direction, of course. All of the channeling plays from yesterday, if you'd bought them at the open, you're a happy camper by following the mechanical rules. Sometimes it just is that simple. They all paid off today. Minpain, Apple, Cisco, and McDonald's are doing well. So the 2-day performance in McDonald's is a nice treat for those of us that were doing the due diligence to look for value on sale. Let's go to the tactical summary next. All right, the Dow Tactical Summary, plenty of dojis today. We got a few channelings here with Salesforce. Merck is a channeling and an overreaction and is 2.5 to 1 on the auto framer. Walmart still is an even better deal today. It's still channeling. It's a 5-day down. It's also a 551W, meaning that today it closed higher than it opened. Even though it was down day over day, it was actually a white candle today, and it's still 3.9 to 1. So that one is even more on my short list. Disney finally overcame its short-term selling, had a strong day today. ETF Tactical, really the only pattern was in Mexico, a 551W. There is, let's see, Brazil was a big breakout today. And the Russell 2000 broke out on all time frames, as did the U.S. mid-cap. So that was really, today was a broad strength day in the U.S., not just a variety of S&P sectors, but also the other indexes, the other equity indexes, I should say. Next up is the auto framer, just a couple defensive plays. With the market at all-time highs, there's just not going to be a lot of auto framers. So the ones that are better than 2 to 1 are ones that are on sale. They're value plays. So Walmart, United Health, Chevron, Johnson & Johnson. The daily squeezes, Home Depot, always on my list to frame. There's Procter & Gamble, Johnson & Johnson, and Walgreens, and I'm trying to remember, XLP, pharmaceuticals. You know that I like Honeywell, 2.2 to 1. And Walmart, again, is poised for a pop. So I think Walmart is really setting up nicely. And there's more room for McDonald's to go, too. In the Four Seasons of MACD, up next. Still being dominated by the fall in both ETFs and in the Dow. There's McDonald's in the summer. I like that one. NDX, McDonald's, and Apple. I think those are both short-term focus stocks. The small caps and the mid caps are outperforming the S&P right now. And yeah, tech had another good day. Both the Qs and XLK were both good. So I'm looking for continuations there. And that's what I want to look at for today. Plenty of shorter term opportunities for tomorrow on a follow through day. And if it breaks through to an all-time high, I would expect that to be a boost. And I would look again to see the small caps and the mid caps, those indexes in the U.S. doing better. Okay. All right, that's everything I got, and we'll get this published and posted.